Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks, and a great weekend to kick off this Labor Day weekend. Market-wise, let's take a look at it out here. We have the Dow right now down 40, NASDAQ off 10, S&Ps are off 2, gold contract up $8.60, traded $1,292 an ounce. Silver up 14 cents at $19.61 an ounce. Platinum up $5 at $1,425. Copper down 4.5 pennies at $3.15 a pound. Light sweet crude up 65 cents at $94.53 a barrel. Bonds, they just don't stop. 10-year up 4 ticks at 126.11. That's on its way to the 128 area. 30-year up 14 at 141.19. That's almost hitting right where I suspect it wants to go right now, which is the 142. It's going to go a lot higher, but right now the 142 is the number. King dollar down up 66 ticks, trading out at 82.51. The euro's down 10 at 131, and the yen is off 18 at 103.69. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, we are at 1997.67. You got down to 1990 today. This is going to get really interesting, folks. The reason why is this. So your two benchmarks for the close tomorrow go like this. It's 1994.76. Actually, I want to can the 1994. The reason being is that if it gets below that, that's not a big deal. Well, what it is that, yeah, it can get into the lower range, but it can test the high just as quick. Your benchmark to get down to the 1900 mark is 1991.39. And what that is the high that was generated out there on the 24th of July. Volume-wise, this is going to be the lowest volume of the year today. That's the way that it's playing out at this particular point. The way we are set up for the week is that it's going to be the lowest volume for the week, and I suspect it's going to be really close whether this is going to be the lowest volume for the month. So in that context, it's really cool because what it's going to be all about is that where does the S&P cash close? That's what it comes down to. And that 1991.94 number, 1991.39 number is your benchmark. So we'll see where that whole baby shakes out tomorrow at the close. Dow Industrials. What do we have with the Dow Industrials? Dow got down. Dow's off $42 right now. We're at 17,079. Now the Dow double topped. So the Dow at this point has failed. The volume failed. The price is failing. We'll see where that baby closes tomorrow also. And in fact, if we put up, I'm going to go back to the S&P for a second. I wanted to see what kind of setup we're getting on a weekly basis right now. Yeah, see, that's going to get interesting. On a weekly basis, you're going to get a little doji up there. That's what we'd have if, in fact, we closed under that benchmark. NASDAQ composite, we have with the composite, she's down $11. Really, it's a sideways market, light volume. The composite is quite a way to go down to get inside the lower range. We're at 4558. It would be 4478 in order to get back inside that lower range. Gold contract, it's doing good, folks. So what you have with gold out here is this. Gold today traded up to $12.97. You're at $12.91.50. You had an expansion of volume. We have 100,000 contracts out there, which we needed, by the way. Once you got back inside this larger range, which we did yesterday, which was the 12.8130, that sets up that we'll make the run up here for the 1324. I expect you're going to see the run for the 1342. So gold has done exactly what it's set up to do, comes back to the June 19th breakout area, does it with lighter volume, rejects lower price, starts moving topside again. Silver. Now, silver has been struggling. Silver got under the June 19th price point, which was $19.95. This is pretty sick. Wait do you see how this it's 19.94. Yeah, man, you're going to love this. I'm telling you. Okay, so check it out. June 19th. The low at June 19th is $19.945. Okay? When silver broke down, gets below it, has lighter volume. Then what ended up happening, and this is what you're going to see, and this is what's so cool about how you start pushing with volume. On Tuesday, we pushed into 1973. Volume expanded to 33,000 contracts. Didn't hold price. Yesterday, we do 36,000 contracts. Price doesn't really move. Today, what ends up happening, you do 54,000 contracts. Now, check this out, though. This is the deviance of the market, and this is the beauty of the market. You do 54,000 contracts. You get to a price point of $19.95. We know that the inside of the June 19th area is 19.945. And guess what? We do it with monster volume. And it still doesn't hold price. Now, what does that set up? That sets up deviance, but it also sets up, folks, you're going to be right back up to 1995, and inside that silver contract, that's going to go right along with gold. That's a lot of buying out there today. So what that's saying is that I still want to see it get back inside there, but that's saying bottom line is it is going to get back inside there. It's going to push with volume. This break today, meaning the amount of volume, the wide price spread you had, is saying that silver is on its way to 21.67. That's a big move. That's a big move. What it will also do is that it gets the metal market together. 10-year bond. What do you have with the 10-year bond? 10-year bond right out here today. We did 1.4 million contracts. You're at the highs up here. We're at 126.12. Your swing high that it's going after is the 127.01. I suspect we're going to get up there. We're basically building cars to get up into that area. 30-year bond took out its highs once again. 30-year bond, we are at, we hit, you got to love this, we hit 141.30. And there's 32 ticks to a point, and 142 is the first number up here, you know. The way bonds did 520,000 contracts, that's a huge amount of contracts. Bonds want to go a lot higher. If we look across the world right now, we're at 2.3 in our 10-year, and, you know, bottom line is that this is a whole worldwide deal. And the worldwide deal inside the bond market, folks, yields are going up, yields are going down, bonds are going up in price. King dollar. What do we have with King dollar out here? What King dollar did out here today, she is sideways movement. Got down to a low of 82.34, trading at 82.50 right now. She's backing down. She's backing down with lighter volume. It's really cool how this is shaking out. I suspect what we're going to have here, the dollar index will trade into 81.64, have lighter volume. That's going to set up the next move higher in the dollar. And what's so cool about this, to see with the dollar taking a break, you know, you have gold coming back up, silver coming back up, and that's what has to happen for both gold and silver to go higher and, in fact, the dollar index to go higher, because that's the way this is shaking out right now. If we go over to the euro and we take a look at the euro right now, euro is sideways move out here today. We're at 131.84, but I expect what you're going to see here is that the dollar backs down a little. The euro can get up into this about 133 price point, and, you know, if you get some juice behind it, it can almost get up to 135. The 133, I suspect, is probably where this baby wants to go. Some of the high-volume stocks in a low-volume market. You have Twitter. Twitter's up $1.60. We have Facebook down 88 cents. Let's see. Williams-Sonoma, that's off $8.70. That thing is getting whacked in a big way. There's no two ways about that. If you want to see how stock prices go back to supply and demand, it's just written all over this. Last time with price and volume, you know, is laid out at $65.87. We've gone to 66.05. Monster volume. This is going to be, you know, this is going a lot lower. But if you just want to see price and volume, how they rule, check it out. This is Tom O'Brien. This is TFNN. You stay right there, folks. So come right back. Dow Industrials right now down 40. Nasdaq's off 11. S&Ps are off 2.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. I want to know what's going on in y'all world. And we talk the world of bonds, folks, okay? When you go over to Europe, it's absolutely amazing, okay? Overnight in Europe, each bank, okay, so picture this, what ends up happening, you know, like our banks in the United States, banks in Europe, they've basically been pushing money, our banks still get paid pushing money into the Fed, bottom line. Why? They shouldn't, but they do. Bottom line, overnight in Europe, guess what? Money markets, it didn't happen. It went negative. It went negative. If they want to push money into their European Central Bank, they charge them. You take a look at, this is just amazing. So a the 2-year, okay, note in the United States is at 0.5%. The 2-year note in Germany, you have to pay them. Yeah, you heard that correct, folks, okay? That's the 2-year. Now, check this out. This gets really bizarre. The 10-year, you want to lend money to Germany on a 10-year, it's 0.8%. So if you think that our 10-year at 2.3 is inexpensive, you better understand what the correlation is. And, that's right, our man Mark, and you have euro exposure, which the euro's going down. These rates are going a lot lower, folks. Let's go to Dan in New Jersey. Hey, Dan, what's going on?
Hi, Tom. Doing well. I had a question on your price and volume evaluation on IBB.
Let's take a look. You got the iShares NASDAQ Biotech Index. The low is 190. The high is 276. We're right at that high right now. Okay, so let's bring this back. We'll put it on a weekly and a monthly. Your high that it's testing out here is 275.40. We hit 276. So are you looking to buy this or sell it?
Sell it.
Okay, so
the specific question is if price and volume, are you only looking at the high of that bar or the whole bar? Because we're still inside that February 14 bar.
So this is what you do. We hit the high today, which is dynamite, okay? Meaning the high of that bar of, we're looking at the week, folks, of February 14th. So the week there, the high is 275.40. Your volume is 488 million, okay? So today we're going over it. Right now you're under it, and right now we're banging out. It's 3.4 million right now, and that high is 8.4. So it's really cool because that means tomorrow you're dealing probably with, 4 million versus 8.5, 8.4, okay? What I would do, I would just wait till tomorrow, though. I'm waiting tomorrow even on the S&P. The reason being is that at the close, you're getting close to the close, it's going to say the whole ball of wax. But then what you're also going to get on the monthly, check out the monthly. The monthly, it's 27 million, 27.3 million versus 19 right now. And this is the kicker, because what you like is both things, folks. You want to test, but then you want to, if you're going to sell it, or if you, let's say right now we're talking about selling it, you want a projection on the other side. So your projection on the other side is 245 to 207. And where I'm getting the 245 to 207, folks, is this. 207 is a high volume low that wants to get tested. What does happen, though, is that as you come down, that 245 will prove support at the beginning. So that's a decent risk versus reward trade there.
Now, if I just wanted to throw something and just use some puts just for a small amount. Yep. I mean, with the
go out
little volatility.
No, this is cool. Go out. This is what to do. We just started buying some puts ourselves. Not on this, but on a few other things. Right now, folks, what's going on is this. And we haven't traded options and market insights in a long time. But what's happening is that the VIX is so low that, and because we're at highs like this, and you have the high volume lows from our last pullback, and you have the February 5th deal, you can get them at a very good price. So, and I would go out to October.
October, right, okay.
That's where I'd go out to. You can go out, yeah, see, this isn't bad. The IBB is more volatile than, some of the individual ones, but you could go out there, and if you go out there, I would go into at the money ones, or you buy a bear spread, And what happens at the money ones, like right now, the 275s are basically 860. You can go with the 270s at 730. And that's not bad because you're looking from 45, 55, 65, 75. Yeah, you're looking for at least 28 points. And you're if you went for the 70, you're giving up 3. So 28, you really, it's costing you 9 points. But 9 points out to the 3rd Friday in October is not bad, man.
Beautiful.
I'll do a put spread. Put spread. Okay, man.
Thanks, Tommy.
Have a great one, man. Have a safe one. Now, folks, let's go over to our man, Mr. Andy Heck. And don't forget, every Tuesday, Thursday, 5 to 6 o'clock, right here, Andy has an outstanding show. You get all that programming at TFNN right on your cell phone, tfnn.mobi. Andy also has an outstanding newsletter. It's the Technomento Commodity Report. The way you get that, go to TFNN, you go to newsletters, trading newsletters. You can check out the Technomento Commodity Report and test drive it a month, actually, absolutely free. Let's go to Andy. What's going on, man?
Hey, happy holiday weekend.
Yeah, happy Labor Day, man. That's a beautiful thing.
Summer's over. Hey, there's a lot to talk about today.
I like that, man. I like that. Let's yap away.
Let's start with one of your stocks that you like to watch, Valley, because iron ore is moving. And it's not moving in the right direction. It looks pretty bad. Basically, iron ore is down to like $87 a dry metric ton.
Okay.
All these iron ore stocks are getting hit.
Yeah.
And I think that the big iron ore producers, the BHPs of this world, are trying to push out the high-cost producers. Inventories are really high in China. And I see Valley is close to 52-week lows here.
Yeah.
Not looking so wonderful.
No, it's not, because it's an ABC structure on the way down, man. 1121. It broke the B point today with volume. So, this is a problem. Yeah.
Yeah, it's a problem. The next thing I want to talk about quickly is oil.
Okay.
Now, oil is up today, 72 cents front month, but it looks bad to me. Let me tell you why. Couple of reasons. First of all, the products are not following. Demand for the products is not good. You got the crack spreads down today. The gasoline crack's down about 60 cents. The heating oil crack's down over $1.25. You have the spreads narrowing, meaning the market's going from a big backwardation into a contango.
Okay.
The last time we were in a contango in 3-year oil, the oil price was $80. So those two things
together, say that to me again.
And the trend is down.
Is the contango down or up? The front
contango is when the deferred prices are higher than the nearby price. We haven't seen that in a long time.
Oh, I see. Oh, I never realized. So the contango, is it always higher or can be lower?
No. The contango, in other words, if oil nearby is $95, deferred oil would have to be higher than $95.
As the definition for a contango.
That's a contango, when deferreds are higher than nearby.
Cool.
Backwardation is the opposite.
I
when
got
deferreds are lower than nearby.
Okay, you stay right there. Andy Heck, Tom O'Brien, we want to hear from you folks. 877-927-6648. Coming right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization automation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow down 32, NASDAQ off 8, S&P's flat. We're talking with our man, Mr. Andy Heck. And don't forget, folks, every Tuesday, Thursday, Andy comes right after me, 5 to 6 p.m. Eastern Standard Time. You can get all that programming right on your cell phone, TFNN.mobi. So
let me just finish up on oil.
Cool.
Oil has a decent volume update today. But as I said, for the reasons I said, I don't like it. And the other thing is, what's going on in Europe? The economies are weak there. That's going to lower demand. China, lower demand. And there's lots of oil around in the U.S. and Canada.
Oh,
so
huge amount.
I think that, although it looks like it might be turning a little bit here, I think you use this opportunity as a scale-up sell.
Yeah, no, listen, it looks to me like we're going to 84, 85 bucks. I mean, yeah, can you get a bounce into 95 first, 96? Yeah, you can, but
absolutely, and that's good because it'll alleviate a little bit of the oversold condition.
Yeah, no doubt. And folks, we're going to get a huge break on gasoline. Gasoline, we're at $2.75 wholesale right now. It looks like $2.50's in the cards. So
yeah. As long as transportation costs keep low.
Yeah, it's huge, man. I mean, that's money in everyone's pocket immediately. So
absolutely. Big tax break. Big tax break.
Yeah.
All right, let's talk gold and silver.
Cool.
Now, very interesting today, Tom.
Yeah.
Gold traded up to just under 1,300.
Right.
Silver traded up to just under $20.
Right.
There was a big option expiration on the over-the-counter.
Right.
Between the big players today.
Sure.
So, and the major strikes, because of the action recently, $1,320.
Right.
So I think the action is very positive here. I am, I've been on the show. I've been very much on the fence about these things. I think that now they're looking a lot better. Gold and silver are reacting nicely to news out of Russia. They might have some legs here.
It looks like, I really like what silver did. Silver still has to get back inside that, 1995.
I mean, if you bought it last night and you watched it go up and come down, you're a little frustrated here, but I think you're okay.
Yeah, no, listen, I
think you're okay. So I think they look good. But the main reason we got up to those levels and we failed those levels is because of those options that were out there. Now they're gone. Now the market
I understand.
Clear sailing.
I understand what you're saying, but to me, it's just it matters where the volume goes, where the price goes, end the story. So I understand.
I hear you, but there's a gravitation on these option expiration days to major strikes where there's major open interest.
I understand that, but guess what? That could have just went the other way just as easy with major strikes below it and wipe everyone out.
Oh, that's true. That is true.
That's my point.
But the major strikes are where the ranges have been, and gold's been trading around 1,300. And if you look back over the past couple of months, silver's been around the $20 level. So it makes sense that the strikes were there, and that's positive because that means that people were buying options around those levels. I think these things are going to take off, and I think that the main reason is due to these what you were talking about before I came on, these very low interest rates.
Man, I'm telling you, folks, we want low rates, but I'm telling you, this thing is actually worrying me a bit. It's like, okay, hold it, man. So picture this, is that if you have rates, well, here, I'll tell you what, this is a riot. So you heard the ad, folks, about the Tiger Real Estate Fund, okay? So we're refinancing properties, and we're paying 5% for 4 years, right? And I know, I had got a presentation by Blackstone. They wanted to finance our properties, and that just turned into a lot more money than I thought we could do it ourselves. And what it had to do with is that we're selling some of these, so I didn't want to do a 5 or 7 year deal with a penalty for 5 years, okay? And that's how that's how the Blackstone deal goes, and then they sell it to the public. So, but to fast forward, we're paying 5% on the property, with secured property, paid monthly and all this. And I'm saying to myself, well, that's a good deal for us and it's a good deal for the client, right? And as I'm watching these rates, though, I'm saying to myself, man, are we going into deflation, man? I mean, this is heavy, folks, because I'm looking at 5% and it's secured. I'm saying to myself, well, that's a deal, but that's a really sweet deal in the aspect of you're only getting 70%, this 30% kicker inside to be secured. So I'm saying to myself, how much lower are we actually going to go? Because it looks to me like we're going to go a lot lower than I even thought we're going to go. Do you know what I'm saying?
Yeah, exactly. And you know what, Tom? I'm looking at these European rates, and I'm saying to myself, I want to borrow money in euro and lend it in dollars and take advantage of this.
There's no doubt, man.
I want to be short the euro.
Because the euro's going down. I know, man.
And I want to put that money on deposit in the U.S. Treasury market.
Oh, look at this. So if you a true lock-in, folks, watch how this would work. And I'll just do it a short one. If you're watching Tiger TV right now, I have all the rates up of the United States and Europe and Asia, right? And this would be just to consider a carry, folks. And so what you have is this. Our 2-year notes are at 0.5%. Well, if you can go over to Germany and borrow money, okay, it's going to be like nothing. And then you sell it to our government at 0.5%. And then you basically, if we're correct in the assumption that the dollar's going to go up, you're probably going to make money hand over fist because the dollar's going up. You get 2 years to pay back the government of Germany, And the bottom line, you're going to pay them back in euros. You're going to collect dollars, man. That's
exactly right. That's a great carry trade.
I know.
How often have we seen this? We've never seen this.
No, listen. When I start seeing these negative rates, well, last night, folks, was the first meeting in Europe that the money market rates in Europe went negative. So it's like, and I'm talking about all of Europe, okay? Central bank in Europe, if you wanted to, if a bank, this wouldn't be for you and I or the citizens of the Euro, it would be for all the banks. If they wanted to stash their money overnight at the European Central Bank, the European Central Bank charged them. And that's like, oh, really?
Tom, I'm starting to think that one of the nicest Swedish trades out there could be long gold in euro.
So you convert. Okay, let's get this. So I take. Yeah, but see, but gold is priced in dollars. You're sounding like.
Oh, I understand, but you go like Gardman. No, but I'm saying you're basically shorting the euro and long the gold.
So let's see. Hold it. Let's say you take $100, you convert it into euros, you buy gold. That wouldn't make any difference, though. See, that's a. Oh, here, watch. That doesn't make any difference because you're still paying the same amount of money for gold. So if
you're paying the same amount of money today for gold, right?
Yeah.
Right. But if you long gold, if the euro goes down, since gold is priced in dollars, gold is going to get much more expensive in euro.
Yeah, but watch.
You get it on both sides.
But watch. When you buy gold in euro, you still got to convert it to dollars.
Okay. Yeah, no, I
no,
understand.
you do. That's the whole Gottman gaff,
trade.
man.
It's a short euro, long gold.
You're talking to Gottman too much. That's a Gottman gaff, man. That's so what? When you do the numbers, though, man, that's how that works.
It's two trades. Okay, I got you. But it is two trades, and I think that when the euro goes down, if gold stays the same in dollars, gold and euro goes up.
It does, but my point is to start the trade, right? Okay, so watch. You start the trade. If you took dollars and put them into a euro, right? Mm-hmm. When you take a euro to go buy gold, guess what you got to do? You got to put it back to U.S. dollars to buy the gold.
Right. No, I understand what you're saying.
That's a Gottman gaff, man. I love you, though.
If you look at a long-term trade in gold and euro,
maybe you should buy it in yen. I'm only kidding. Okay,
yeah.
Okay.
All right. So, listen, cattle. Let's talk cattle. I've said to you a couple of times this year, every time cattle dips, it's been a buy. Now, cattle dipped. Cattle came storming back today. We're up three quarters of the limit here. We're over $1.50 again. Now, I want to wait and see until next week if this isn't a last gasp for the end of grilling season, Labor Day. But cash cattle prices are much higher than the futures. So there is still a shortage in cattle here. But there's a lot of things pulling at this market. You got the low feed prices. You got the fact that animal protein producers are going to start increasing the size of herds. But demand is up for these things. And I just wanted to point it out because it's just a continuation of what we've seen in 2014. Every single dip in cattle has been a buy.
Yeah. You know, I want to pull up the hogs for a second, because you know what? It's interesting here, and I think it's just what you just said. Before hogs really let loose to the downside, I think they did the same thing. They retraced. Yeah, they did. Okay, so if we pull this back, so your first leg, first high was out here, $1.13. They come down. Not really.
Yeah, hogs are different. Let me tell you.
No, I know. I was just looking at it.
It takes a lot shorter time to raise hogs.
Yeah, no doubt about that, man.
So, the turnover there is much better. And you had this PED virus, which kind of skewed things up in the spring.
Yeah, no doubt.
So, a little bit different. But, listen, if cattle goes up, hogs are going to go up because it's just consumer choice.
No doubt.
That's the way that goes.
Cooking, brother. We look forward to the show.
Right.
You stay right there, folks. We'll come right back. Dow down 37, NASDAQ up 7, S&P's off $1.50.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow Industrials right now down 45. Nasdaq's off 10. S&Ps are off a couple points. And bottom line is that coming across the tape here, the president is going to be speaking as soon as the markets close. That's never a good sign, folks, as to what's happening, because they're waiting until the market's closed, and we'll see if some of the operators decide to sell into this as we get into the closeout here. We have right now, let's see, bring this baby up. We take a look at the E-minis. So, yeah, we're at 1994.50. The low is 1987 for today. We put this on. So, yeah, well, it's going to get interesting here, because what you do have is that 1998 this morning was a high volume low. You know, at 9:30, someone sold right into this, 67,000 contracts, and so we'll see how this baby shakes out. You know, could get to the high of that low, but I suspect you're going to get slight selling as we go into it. The numbers that we're talking about, the benchmark numbers, they're very close, meaning as we come into tomorrow. So we'll see if, in fact, you get down to that 1991.39. You know, it's $7 down. And $7 in the market we have right now seems like a long way down. I can tell you that. It just is, you know. Coming into the long weekend, though, as folks basically hedging their bets, there's no doubt, I suspect, that folks that are running big dollars, big amounts of money, they have to be concerned about bonds. They have been for quite a while, okay? But they really have to be concerned about what the heck is happening, that in Europe these bonds are going to zero. You know, that's incredible, folks. That's absolutely incredible. It's like free money. So if there's free money, you know that's just not a common sense deal. It's like deflation. And deflation is, you know, problematic in a huge way. So what I suspect, you know, we're going to get out there, what you did have yesterday is that yesterday the European Central Bank turned around and got Blackstone as an advisor as to how to basically put together packages to buy assets. And I suspect what they're going to do, and this is where Blackstone no doubt has it made, they did it when we had our financial debacle in 2007. What that will be all about is that you'll set up a depository. That depository will buy all types of bond assets, push it back into the economy ASAP. And they'll have to do it very quickly. The key is going to be, will anyone want it or anyone take it? What we had in our economy is that for a long period of time, no one wanted it. You know, you hear about the amount of cars that are being sold. It's actually more than 2007 right now. The bonds are more than 2007. What that has to do with, flat out, folks, is the collateralized bond market is very vibrant, and you have huge amounts of folks buying those bonds. Pension funds buying those bonds, trusts buying those bonds, states buying those bonds. And that just keeps pushing the credit out into the marketplace, so you can walk into any car dealer and buy a car for basically a signature. So that aspect itself is important to understand why that market is so vibrant. That's why it's that vibrant. You know, so we'll see how this shakes out, but they got to get it done ASAP, because you know that too much of a good thing, there's a problem with it. So we go back to the E-minis for a second. We take a look at this coming into the close, and this is it's not that they're moving that much, but you get a slow day out here. Yeah, they're going to push it a bit. How many minutes we got left here? Let's see. 5 minutes. You never know. 5 minutes can be on a Thursday with the president speaking on a long weekend. Yeah, you can. We're at 1994. That can get to about 1991 in a heartbeat. You know, we'll see where this whole baby does shake out. Volume-wise, what we have out here is going to be one of the lightest days. once again. Right now, so check this out. This is going to be amazing watching this shake out. We're at 360 million. So it's probably going to be 460. There's probably 100 million to buy or sell on the close out here today on the NYSE. On the NASDAQ, we're at 1.1 billion. The NASDAQ will probably come in at about 1.4. We are lined up right now on the daily, on the weekly, and on the monthly to have the least amount of volume. So the key is going to be, does the S&P fail or not fail? Does the Dow fail or not fail? The way the Dow is set up right now, it has already failed, meaning it double-topped. It double-topped out here at the price point of 17,151. The real key for me is that cash S&P, however. The cash S&P, you know, has a way to go down. I mean, in order to basically fail. It's 1991.79. As Andy and I were talking, the gold and silver, that looks basically decent. And, you know, the way that Ukraine's basically shaken out, folks, is that, you know, Putin, just as expected, what you're going to see on a continual basis is that he's going to basically just keep taking land over into Ukraine. It's happening right now. It's going to continue to happen. And, yeah, we're going to probably put more, you know, not regulations, oh, my God. Sanctions. We're going to put more, thank you. We're going to put more sanctions out there. It's not going to make a difference. That's the bottom line. Putin is going after the deal. He's going in for the kill, and there's no one that's going to basically get in his way. Why? Because all the folks in Europe, unfortunately, are scattered. Their large corporations still want to do business with Russia, and they got no guts. That's the real bottom line. So, sad but true. And, you know, it's not a good scene. You know, will it affect, well, it's affecting Europe already. You know, we'll see how much farther it goes, but it's definitely affecting Europe already. What I still can't wrap my head around, I'm still trying to figure out why the interest rate's going negative, though. That's a whole different ball game. It's like a whole different ball game. We go take a look at the XLF out here, our own financial markets. What you have with the XLF, we're at 23.23, and the benchmark on that baby is 23.07. You know, we'll see whether it gets underneath that area. The XLE, the energy market, we take a look at the XLE. The XLE right now, that's in the lower range. One of the biggest things that I think are going to help everyone in the good old USA is the aspect of this gas price coming down. You know, it looks like gas is a very large ABC structure on the way down, with wholesale going to $2.50. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. And, of course, don't forget, it's Thursday, so after my program tonight, we got our man, Mr. Andy Heck, coming up. Right now, you get the Dow down 41, NASDAQ off 11, S&Ps are off 2. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night. And if you kicking off this weekend, folks, make it a great weekend. Let's take a look at one of our belief cards. This is by Robert Blunt. Remember that there's a part of life for which you are the explanation. That's a beautiful thing, folks, no doubt. Market-wise, let's take a look at it out here. We had the Dow Industrials down 42, NASDAQ off 11, S&Ps were flat. Gold contract up $6.60, trading at $1,290 an ounce. Now, what we had with gold is this, folks. Price spread out here today in gold, we got to a price of $12.97, did 100,000 contracts. That's a good scene, folks. Why? Yesterday you got back inside the 1281 area. I suspect we're going to build some cars, get up to this 1324, up to the 1387. Silver was actually even more impressive. Now, it didn't hold price, but what you had with silver, you had a nice wide price expansion with juice behind it, with volume behind it. You got right to the higher range and gave it up. 1995, the range that we're talking about is 19.945. That is the day of strength from June 19th. And we did 55,000 contracts up there. Bottom line is that I suspect what you're going to see, we're going to be right back up there. That will set it up to get to the 2167 area. Bonds just continue higher. You get the 10-year right now at 126.12. You did 1.4 million contracts out there. 30-year is at 141. You did 567,000 contracts. Big numbers, folks. Over in Europe, you had in Germany, the 2-year rate is negative. The money markets last night, the banks, any bank in Europe going into the central bank, they were charging them to put money overnight in the bank last night. They went negative. King dollar. We go take a look at King dollar. What you have with King dollar? That was a flat market out here on King dollar today. Low was 82.34. The high was 82.62. We're at 82.50. Sideways move. I expect King dollar is going to back down into this on a short-term basis into that 81.60 area again. Build up some cause for higher price. Our phone number is 877-927-6648. I believe the president is speaking right now, and it's going to be intriguing as to, you know, we can't do both. Can't listen to what he's saying. But the S&Ps, it's really a trip. It's particularly a trip when the president's going to speak as soon as the market closes. And so what you had coming into that close out here is that you had one monster sell it right down at 1550. Sold it down to 1993.75, and you did 64,000 contracts. Well, it snapped right back from the 1994. Right now, we're flat at 1997.25. When you get a spike like that down, guess what? You're going to be right back down to that level. So we'll see what exactly the president's saying. Market-wise out here, high-volume stocks in a low-volume market. This is what you had. Facebook was down 77 cents. You had Twitter up $1.30. Williams-Sonoma got smacked. That was down $8.96. And what you had with that, folks, is that, yeah, they made their numbers, but what you had specifically is that inside their businesses, from last year to this year, except for what happens is that we're all familiar with Williams-Sonoma, I think, and we're more familiar with the kitchen part of the store. You know, they sell all the beautiful items. That part went up 3.8% from last year to this year. What went down substantially, though, was Pottery Barn Kids, Pottery Barn Teens, Pottery Barn. I know, so they own all of those also. Yeah, Pottery Barn Kids, Pottery Barn Teen, and West Elm was up, but West Elm has only been out there. So it's the Pottery Barn part of their business that went down, and it did go down substantially. Some of the Dow stocks out here, this is what we have inside the Dow Industrials. You had Caterpillar up 10, Boeing was down $1.09, you had Oxy up 63, Big Blue was down $25. You had J.P. Morgan Chase off 43, Hewlett Packard was down 17. And what we are going to have, the way this is setting up right now, let's go over to the SPY, the SPY. So the SPY out here did 52 million shares out here today. We put this on a weekly, and what you're going to have is this. Your benchmark price is 199.06. We have done thus far 211 million shares, and bottom line is that you're going into 334. So what we're going to have is we're going to do about 250 probably into 334. The real question is it going to close over the high or under the high? That's on your SPY. We take a look at the, this is pretty cool, folks. That's on the weekly. Now, what we can do here, because we get the end of the week, the day, and the month. So the way the monthly is shaking out, this is what you have. Last month we did 1.8 billion. This month we're at 1.7. So it looks like we're going to do about the same. The bottom line is that it should be banging out, who knows? I mean, it's hard to, should be $3-4 billion. Bottom line is that, we get no juice up here. 3Qs. We take a look at the NDX 100, the 3Qs. Right now, the 3Qs is hanging at highs. You get 20 million shares out here today traded. The benchmark is way down on the 3Qs. You're talking about 97.32, and right now we're at 99.41. Last month we did 127 million. We're at 80 million right now, so we'll probably do 100 million. And when it took the swing point out, by the way, folks, it was 139 billion, 1.3 billion. So bottom line is that that's over the highs, have lighter volume also. We take a look at the Russell 2000. We'll use the IWM right now for the Russell 2000. Is the weakest indice. Looks like it wants to come back to the lows before the rest of them do. The IWM is the only indice that's still trading out at where it was trading in December of 2013. It's come off the highs with volume, hit highs with light volume, has high volume lows, and the February 5th level is still out there at 107.27 and hasn't been tested. So I suspect what you're going to see is that it's going to be the Russell 2000 that basically lead the rest of the indices down south. King dollar. What do we have a king dollar? King dollar is basically backing down after making a nice streak on the way up. I suspect what you're going to have inside the euro. Euro is going to get a little pop up where the euro had already gone from 138 down to 131. I suspect you're going to get a pop somewhere into the 133 area. Let's go over to J.P. Morgan, JPM. We take a look at J.P. Morgan inside the financials. JPM. So J.P. Morgan today, she went right up to ICE. Now, ICE on J.P. Morgan, where she fell apart in April, was $59.39. We got to $59.37. It's so weird. With 9 million shares versus 29 million. You can see the same seller that's hanging up there. And this is the identification. You never knew who they are, but it's like, man, how does this work? You get up to that certain level where they fell apart. That's a supply line. There's more supply that's up there. And you can see the correlation is pretty intense. You're talking 9 million into 29 million. It's a big number. Berkshire Hathaway, BRK. Now, this one here is the largest weighting inside the XLF right now. Berkshire Hathaway, the B shares are trading at 136, and that is at a high. We take this and we put this on a, let me see, I'm going to put this on a monthly. Let's see what we got. Okay, so on a monthly, you just get higher price. On the weeklies, of course, we get higher price. And the last time we had any juice up here. So at 136, it looks like it's not a bad-looking chart, really. It's not a bad-looking chart at all. So, actually, in fact, it can be an ABC up. Let's look at this. So, 83, 93, 103. It's almost 27 points. 27-point ABC. 27.35. Oh, interesting. Okay, so check it out, folks. So, Berkshire Hathaway just finished an ABC structure on the way up. That's where this comes down. It's not dangerous. That's powerful. But when you finish an ABC structure on the way up, all the way down, folks, you do something other. You'll build some cars, go sideways, pull back with lighter volume to basically build up for the next leg in the marketplace. This is Tom O'Brien. This is TFNN. Don't forget, folks, we do live programming every trading day from 8 in the morning to 6 in the afternoon. You get all that programming right on your cell phone. TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com, hit the Tiger TV in the right upper-hand corner. You get the audio, plus you get the video. We're going to be right back. Stay right there, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish down 42, NASDAQ off 11, S&Ps were flat. Let's go over to our man, Mr. Basil Chapman. And don't forget, folks, every trading day, 11 to 12, you can listen to Basil. Great newsletter also. You can test drive that at TFNN.com. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there? Ready for good Labor Day?
I'm sorry, what?
Ready for good Labor Day?
Oh, yes, I'm ready for a very good Labor Day, certainly, day off. But I also have to send you regards from a number of people that were at the Boston Investors Group meeting last night that I was the guest speaker, and a number of people said, send our regards to Tom, and I think we should have a lot of new listeners to TFNN.
That's a beautiful thing. We appreciate you growling and prowling out there. Appreciate all those listeners, no doubt.
Yeah, they're fabulous. So I'm showing the Dow chart right now.
Yes.
And there are a couple of things that, in the Chapman wave, we look for the lowest, most obvious low bar, and then we merely count each successively higher peak, and we expect to get to at least a peak D.
Yes.
We're at a peak C, and what's interesting about this is that there's a left side, right side price time match, which went from the 17th of July in the Dow at 17,151 all-time high. So 15 bars down, we get to a trough D at 16,333 on the 7th of August. Now we're at 15 days up. But what happened was on the 13th day, we hit 17,153, a nominal new high. So two things happen. One is if you break the left side lip, that's what we call it on the left side, in a shorter time span, that's very positive. So what I did for my subscribers last night and this morning, I decided that there could still be a very strong move from any pullback to at least 17,154. That'll start leg D, and it could go higher. So I said to subscribers, let's buy, and we actually bought one of the power shares. We bought the 300% long Dow this morning, and we got almost the low, and it's actually closed very nicely higher. At the moment, it's trading higher than it was at the close, because there was this news report just a few moments ago about the president speaking, and nobody knew what he would say. So far, the futures seem to be saying, okay, it's not too bad. And so it's very important. So another thing happens intraday. There's a technique that I use using Richard Arm's short-term trading index. I use it in a completely different way. I just use certain numbers that I've over the years, I've noticed that if certain numbers are pierced on the upside or the downside, within 1 to 2 sessions, you should get a sharp move to the upside, which starts off in the E-minis and then should flow through to the cash indexes. So I'm not sure if it's going to work. I hope it does work. But so far, it says that all we need to do is break 17,153, and that starts leg D. But that doesn't necessarily mean to say that you'll be expecting a top in the Dow, because the QQQ series, and I think that the Qs are acting extremely well, even with today's bit of a pullback. We've got a peak B, and I'm suspecting, especially at new recovery highs, it's very unlikely that we're going to fail at a B. I think we will go higher than 99.68. It doesn't say how high, but the stochastic and the MACD are good. So I think that the QQQ, the NDX 100, will actually help push the market higher. And I'm thinking we now don't have all that much to go on the upside, but I didn't want to start shorting just yet. I think next week's the week that I'll be looking to see whether or not I give subscribers the go-ahead to start looking at the short side. And there are some stocks that look like they're topping out. And actually, what's really interesting, the dollar, I always like to look at the peak D. Well, the dollar just made a peak D, and it's pulling back, but the technicals are still very strong. So it might just be a mild little pullback. And what's fascinating, you just spoke about the IWM. IWM made a peak D as well in the daily chart. And to put that together, you had mentioned Williams-Sonoma, and I didn't see this until early morning when I saw that it was starting to break down. It too made a peak D at the 4 higher peaks and then collapsed intraday. So I just wanted to just show that how powerful these peak Ds can be. This time I think we might go to an E in the Dow. I'm not sure yet. We'll see how the market plays out. But there just seems to be enough residual strength to go a little higher next week. I'm not expecting that much, but just high enough to make those extra highs that I need to see in the Dow and the S&P. In fact, the S&P is also at a peak C and also came back very nicely. They didn't even touch the 9-period moving average. And the stochastic is strong and the MACD is strong. So I think there's a good chance that the S&P goes just above 2005.04 to start that leg D. Very interesting period we've got here.
Well, when you just put the charts up, and folks, if you're in your car, I'll explain what we're looking at. When Basil was talking, he's talking about the dailies. But beside the dailies, he has a weekly and a monthly up simultaneously of each one of those indices as he was going through them. So I guess what the real question would be is that it seemed that when I was looking at those, the monthlies and the weeklies, a lot of them were a D. In fact, a couple of them were E, but you did an E. Are you thinking there's a restart on a B? I saw you had E's and B's. Right.
So in the Dow, so far, we've got 1 day to go. And actually, it's a great question. So we've got 12,151.56 in July, and by 2 points, it's actually just on 2 points, we make a new high in August. Well, that maintains leg E.
Sure.
But now what we've got to do is we start to look at the technicals, and you can see that although the MACD, the moving average convergence divergence over there, the green and the red lines, is still very positive, it is really close to turning down, and the slow stochastic has in fact turned down. The blue line is the on-balance volume, which is still positive. And in the weekly count, I've got something really weird at this point. It's this V-shaped pattern Now, the V-shaped pattern hasn't closed in the Dow above that 17,151 level. But this V pattern can be very potent if at any point we start to break down and we go 1/3 below the peak and the trough. That's between 17,151 to 16,333. So I'm thinking that if the Dow at any point starts to go 16,900, maybe 16,870 to give it room on a weekly basis, closes under that, then that V becomes very important and we start to come back down. So at this particular point, it's really important to look at the numbers. That's the way I'm doing it, and the letters for my notation, because the monthly charts are still extremely strong in the Dow, the S&P, the New York Stock Exchange, and the QQQ series. So it starts off, it's like the rudder is the very short term, like the 120-minute chart will steer the daily. The daily will steer the weekly, and the weekly will steer the monthly. So I can't even look at the monthly charts just yet. It's really the shorter term that's going to be the key. But I'm going to make it real simple. This is what I did last night. I ended the talk by saying, watch the volatility index over the next couple of weeks. If it starts to get to the 15-16 area, it's at 12.05 right now. That's a heads up to say, if it holds in that area, be careful. If it gets to the 19-20 area, it says really be careful, because this is the first time.
If it gets to 19 and 20, we're already going to be down 1,000 points. I mean,
we'll be, yep, 800 to 1,000 points. Although in this kind of market with the Fed there, you don't know. But yes, I agree with you. It's exactly the way it would work. But that would inflect onto the weekly charts, because you need to have the dailies confirm a sell mode for the weekly to even get a sell signal. So it's just real simple. I'm just saying that for me, it's a really easy way to do it. The volatility index.
Don't forget, folks, tomorrow, 11 o'clock, you can listen to Basil. Basil, have a great one, safe one. Thanks so much, man.
Thank you, Tom. Have a great
Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. If we go around the world out here, we had last night, you had the Nikkei down 0.4%. Hang Seng was off 0.7. You had Shanghai down 0.6. We take a look at Europe out here this morning. The FTSE was down 0.3. The DAX was off 1, and the CAT was down 0.6. If we go over and we'll take a look at this FTSE right now. So FTSE really had a sideways movement, down 24 bucks. Doesn't tell you much. The DAX is the one you want to keep your eye on, folks. Why? Because the DAX trades just like the NASDAQ. The DAX, however, has not recovered into its high like the NASDAQ did. We are at 94.62, and it came right up to ICE. ICE on the DAX was 95.82. We got up to that level on Tuesday and Wednesday. Today you go back below it again. So the DAX, what makes the DAX so intriguing is this. The DAX, you got to remember something, that the longer-term benchmark on the S&P, not real long-term, but long-term period, is the February 5th low. On all these equities, you have a high-volume February 5th low. Now, the S&P is certainly a long way away from it. A lot of the equities, however, are not away from it. The DAX, what the DAX has done is this. The DAX is at the same level that it was at the beginning of the year. You know, literally. We're at 94.62, and that's where it was on December 27th. So, when you look at the probability, the February 5th low is 9,071. The DAX has been in this range. It ended up breaking the February 5th low in March. It goes topside again like the NASDAQ has. Okay, so picture. The DAX went from 8,900 and then went all the way up to 10,000. And then what did it do? Fell apart again. And when it fell apart, however, it went down and broke the March low, in August, and we also have volume at that level. So the way that the DAX is set up is that the DAX wants to come back down, test that whole area. We'll see whether that area wants to break. Now, our own markets, if we take a look at our own markets and we take a look, well, first, I'm going to go to the February 5th benchmark first, because you'll see this February 5th benchmark is a long way down. You take a look at these. We put this on a weekly basis. I'm talking about the cash S&P right now. And we bring this back, and we're at 1996. So the February 5th price point is 1737, which, you know, that's 2,500 Dow points. That's a long way down, okay? Now, inside the market itself, we start taking a look at a few stocks. Well, if we bring up UTX, we bring this back, you take a look at it. February 5th out here, which was the high volume, down is 107 even. Now, that 107, folks, okay, had 29 million shares traded on a weekly basis. Well, UTX already went to 103. It broke down. The first week it broke down with 33 million. Then it broke under the 107 with 28 million. And you got to remember, you're dealing with 29 million. And then we went to a lower low, and we had 23 million. UTX looks to be a very large ABC structure on the way down. So that's a heads up that, okay, that benchmark is out there, number one. But number two, which is more important, is that now you've broken it and you have a higher volume low. And we put this on a monthly basis. And what you're going to see on the monthly basis is that you're at highs for 4 months with 68, 78, 68. You have 59 to 68 million. You come off the high with 103 million. This month we're going to do 72 million. It's a problem. Well, it's not a problem until it gets a lower price. You know, you basically only 11 bucks off the high right now. But what you have is you have another high volume low that's hanging out there at $83. Okay, that says a huge amount. If we go over to American Express, we take a look at American Express. That's at 89 bucks right now. You put this on a weekly basis, and what you're going to see is that the February 5th swing low is 82. We hit that 82 with 24 million. We got down to that 83 again with 22 million in April, but it didn't break it. And then what ended up happening? In August, we didn't break it, but what we did is this. You did 33 million shares versus 24 million. We got to a low of 85.75. That's two points above the low, but with monster volume. So American Express is telling me you get an ABC structure on the way down. Your A point is 95, your B's 85, so you get 10 bucks, and you see, I suspect, was established this week at 90. That gives you an $80. You get both of those equities going down there saying, okay, I'm tagging out this February 5th area. It's a nice heads up. That, guess what? That the S&P is going to go down there. So we'll see how this whole thing ends up shaking out. Williams-Sonoma out here got whacked today big time. And if you do want to see how price and volume, WSM, it goes back to the last day that had any volume in it. Williams-Sonoma is a classic. There's a lot of classics out here, but they seem to come up one after the other after the other. You pull Williams-Sonoma up, you put this on a weekly basis or a monthly basis or on a daily, whatever you want to put it on. You're going to see that you got the higher highs, you had lighter volume. Right now, let's see, I'll put this on a 2-year weekly. And what you're going to see on a 2-year weekly is that the last time it had any volume, this is a mind blower, was $65.87. The low today, folks, was $65.90. Now, that doesn't mean it's going to stop there, just so you understand how this works. It had gone higher since March with lighter volume. That was the end of the run. When you come off a high like this with monster volume, which we did, okay, so on a weekly basis, thus far, the high on the way up was 15 million. Well, we've already done 16.8 million on the way down. It's going to have more volume tomorrow. So that stock, number one, is coming into a high volume level, but with expanded volume. On the monthly, and this is where it's going to be so cool at the end of this week, because what you have is that you get the dailies, monthlies, and weeklies all lined up. What you're going to have there is this. The real key on a Williams-Sonoma is the trend that has been intact since 2008, is it going to be broken? It's not broken yet. It's certainly not broken yet. It would have to get underneath 62.50 on a monthly basis in order to break that trend. You get underneath that, and then you know what it opens up? It opens up a $40 price point from a price point of $75. So that's pretty intense, there's no doubt. And fundamentally what happened inside the Williams-Sonoma, Pottery Barn Teen, Pottery Barn Kids, all those businesses are going south. And I believe Pottery Barn sells a lot of furniture, right? I mean, I think it's really nice furniture, actually. The Williams-Sonoma unit itself, that was up 3%, which is nothing to scream about, but the other units were down. Futures right now, whatever the president's saying out there, bottom line is that futures went from negative a couple at the close to a positive 1.2. You know, is it going to make a difference? Well, bottom line for me is this: tomorrow at the close on the cash S&P, where is it going to close? Is it going to close over or under 1991.39? That's your benchmark. You close underneath that, we know the volume's going to be lighter. That's going to basically send it down to the low that was established in August, which is 1904. And as we said earlier, the larger benchmark on the way down is that February 5th level. If it closes over it, guess what? You can go to higher highs, no matter what the volume is. What we are going to have is that you're going to have today had the lightest volume on the daily basis. We're going to have the lightest volume on the weekly basis this week, unless volume comes in astronomical tomorrow, which I expect will even come in less. And it looks to me that we probably will have the lightest volume on the monthly basis. So it's really unusual when all that can set up and you've made new highs. What does that mean? That means no one's in the store. You're paying up for the product. For what? For less people, and someone just throws the price up in the air. That's the merry-go-round going round and round, and someone's not going to have a seat. It continues each and every time in the marketplace, and it's absolutely a mind-blower how that works, but that's how it works. We go over to Apple. We take a look at Apple. Why Apple? Because Apple was at 102.25, which is not huge compared to the test that it's doing right now. So on a monthly basis, you're testing the 100.72. It's not going to have the volume. So Apple itself, how it closes out tomorrow, is going to be a big deal. Right now we are, let's see, what's that, $1.75? You're basically $2. No. That's one. Yeah, you're $1.50 above the high. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. The Dow finished down 42. NASDAQ off 11. S&Ps were flat. We're going to be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN, we do live broadcasting every trading day, 8 in the morning to 6 in the evening. All of that programming, get right on your cell phone. TFNN.MOBI. If you'd like to get Tiger TV, just go on your cell phone, TFNN.com. On the right-hand side, you're going to see at the top the Tiger TV. Hit that, and Tiger TV will be delivered to you live. And, of course, all those programs are archived. You can get them 24 hours a day. We actually stream 24 hours a day. We take the programming from 8 in the morning to 6 in the evening, and then we replay that programming until 8 o'clock in the morning the following morning. XAU, the HUI. Let's go take a look at some of the gold indices. XAU out here today, we're at 101.40. Now, what's really cool, folks, is this, is that with the pullback in the physical metal, the XAU and the HUI both did not get into their lowest swing point. The lowest swing point we're talking about in the XAU is 97.05. We're at 101.04, and it's looking pretty good, not real good. It's looking pretty good. It's getting there in price. We need an expansion of volume in the XAU. I do expect, though, what we're going to see, we're going to make that run to 104 to 105. Real key is going to be, we're going to have volume when we get into those swing points. Coming off the low on Monday, let's see, no, Tuesday was decent. You had a small expansion of volume, so we had it there. We'll see how we get into that swing point. The HUI, the Gold Bugs Index. What we did with the Gold Bugs Index, same deal. You're in the higher range. We're at 242. And the way this baby is set up is that it also, see, there's a little divergence here. Oh, no, there's not. No, I got it. Okay. So it's the same deal. We had volume come in the market on Tuesday. Not huge, but enough. So the Gold Bugs Index wants to make that run up there to the 251. And the real key here in the XAU and the HUI is that, is this going to be an ABC structure on the way up? And if it is, what we will see is this. We will see the March swing highs get blown away. See, the March swing highs right now are really cool because when they have some juice up there, okay, so they want to get tested. The real key is that, you know, is that just going to be a test? Or, in fact, is it going to be overtake that level? And the reason that's so important is this, is that gold and silver and that whole market in general basically have been in a 3-year correction. You know, we came off the bottom. We came off those bottoms December of 2013. And if it can get over this 281 level, you're going to get some real juice in the marketplace because of the way that the XAU, the HUI went down. When you go down as fast as they did with no stops on the elevator, well, guess what? You can go up just as quick. And when I say where, right now we're 242. When the HUI went down, folks, it went straight down from September of 2012. That was trading at 528 right down to 210. Once you get over 282, it doesn't mean you go to 5, but it would mean that you're going to go up a good 100 points. So that would be, number one, 40 points from where we are now, and then another 100 points. So that would be a really sweet expansion. The XAU, we take a look at the XAU on that same basis. We'll bring this back. We put this up. What you're going to see in the XAU, the XAU, is that you get over 115, and we had gone down straight down from 191 to 84. You get over 115, you can make a run to 145. So what is that? 30 points, which is decent because we're at 101. You get to 115, with that's 14%. You get to 130 from there. What's that? 14, another 15. Yeah, that's another 10%. You know, so those types of moves are really decent. We go look at the Rand dollar in the correlation of the U.S. dollar. The Rand dollar is out here at 10.60. What does that mean? That means that the South African companies should be able to basically make more money. Technically, however, they still haven't been able to do it. We take a look at Harmony Gold. Harmony Gold right now is at 304. Yeah, it looks like it wants to, run to its swing point first, which is 329, and what is on the market is 371. Now, GFI, which is interesting, that has got some real action going. It took out its swing point, has the juice over the swing point. We're at 463 right now. The real key on that is like, okay, what is driving that right now? GFI itself has sold off a lot of their South African, the biggest part of their South African market. So the real key is going to be, is it Australia, Ghana, Peru, or it's not going to be South Africa, but it's going to be one of those other countries that is putting some juice into GFI. We happen to own GFI also, but bottom line is that that is showing some strength. It's coming into a swing point. In fact, actually, yeah, see, this is really decent. So you're at 463. This looks like it's going to make a run to, it's interesting. It's like almost $6. If I put this on a monthly, let me put this on a 5-year monthly. Yeah, it's the same type of deal, man. These come down so dramatically, folks, from 2011 and 12. They don't need much off this bottom. Well, they do need volume, and they got to get over these prices. 450. Yeah, it's 531. I mean, it's going to be interesting here. You have a slight expansion of volume on GFI, but 664 is game here. You know, so we'll see what's driving that equity, but you certainly have something driving it. FNV, which is Franco-Nevada, this one here was up 21 cents today. This is a large royalty company, as Royal Gold is, and I like what happened here today. Royal Gold and Franco-Nevada came down hard, folks. They came down hard on the 21st. They finally tested that area, rejected it. They did that on Monday. And today it looks like they're going to start building some cars to try to get into higher price once again. We go to Royal Gold. We take a look at Royal Gold. And what you try to do when you're looking at these markets, folks, particularly the gold and silver, it's easy to do. So you can look at the physical market. Then what you want to do is look at the equities underlying that market. And, you know, whether it's 10 or 20 or 30, whatever you look at, then take a look at those and say, okay, do those look like they want to go up versus when they want to go down? When you have a majority of them that want to go topside versus downtown, your probability gets a lot higher that that's what we have happening. Royal Gold doesn't look as good as Franco-Nevada just yet. Royal Gold's going to need a wide price spread, accelerated volume. When we talk commodities, folks, guess what? We get the best man in the commodity business coming up next. Our man, Mr. Andy Hecht's going to be prowling with you every Tuesday, Thursday, 5 to 6 Eastern Standard Time, right here. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great one, folks. Have a safe one. Stay right here. Andy's coming up next. Go get him, folks.